Hello traders, welcome back to my channel. So today I wanted to talk about a pattern that I don't really mention this in my courses or talk a lot about it, but it is a pattern that I am always in the lookout for, as it relates to several of specific price action patterns that I use. And I'm just going to go over the whole principles of this pattern, how you can identify it, what the rules are, and how you would go about taking an entry, and how to handle your trade if you identify this pattern. Okay, if you haven't done so, as always, make sure to subscribe to the channel, hit the thumbs up and notifications on so you don't miss out multiple videos a week that I release, and check out my trading courses as well, and also my private Discord analysis group in the description if you want more detailed about my specific trading techniques. Okay, so Wolfe wave, as the name implies, was invented by a person last name Wolfe. That's where the name comes from, and you can see this is basically the basic diagram for a bearish Wolfe pattern, meaning that we are going to be looking for a target to the downside. This is a channeling pattern where we usually will see it in channels or rising wedges near the top of an uptrend, or channels or downside wedges at the bottom of a trend. So this is a reversal pattern. Now, the reason I really like this pattern is because, for those of you following me, and especially if you have taken any of my courses, you know that one of my favorite patterns for reversals is the triple drives. It has triple thrusts, triple drives, has several names, but it's basically when we have three pushes, one after the other, which you can usually connect pretty precisely with a trend line, and then price reverses. So this is one of my favorite reversal patterns, both to the upside and to the downside. And if you notice with Wolfe wave, it's very related to a triple drive because we're making three drives, but we're also basically sort of compressing into a apex point. The one thing a lot of people, if you're a Elliott wave trader, there is some wave counting when it comes to Wolfe wave, where you have 5 waves, 1, 2, 3, 4, 5. And now we're going to go over these specific characteristics. This pattern is very symmetrical, so it's very important that we have symmetry where the distance between 1 and 3, it's around the same distance at 3 and 5. 5 does not have to necessarily exceed 1 and 3, but usually if it does that and then reverses back in, that is a strong signal that this was just a false breakout and we're going back in. Also, as you can see, these are the key points or rules. So wave 3 and 4 must stay between the channel created by 1 and 2. So that means 3 and 4 are contained within 1 and 2. Then 1 and 2 equal to waves 3 and 4. So this wave is about the same length as this wave. Wave 4 revisits the channel of points established by wave 1 and 2. So wave 4, or point 4, has to be between the range of 1 and 2. There should be regular timing intervals between waves. So again, that means that 1 and 3 and 5 are sort of on the same range of time between them. And wave 3 and 5 are usually 127, 162 fibs of the previous channel point. I don't really use this. I don't measure fibs or anything on this. Basically, I just look for the 5 waves, a triple thrust to the upside or downside, depending what it is. And what we do with this again is we wait to see 0.5. Ideally, you have a false breakout, but you can just touch it precisely and then start coming down. And then you're going to trace a line between points 1 and 4 that you're going to project. And this is going to be your take profit line. So then here, if you see this going, then you would get short somewhere around here when we go back into the channel. Stop loss right beyond 0.5, the turning point here on the third thrust. And then your take profit would be on this projection that you have right here. Okay, so let's look at an example of a bearish and of a bullish Wolfe wave. This is again a pattern that you're going to see in all kinds of markets and in all types of time frames. My first example that I have here is in the Forex market on Euro US dollar on the 15-minute chart. So if we zoom in, and again, you know, the pattern is not going to look perfect every time. That's why you don't really find this pattern a lot, because there's several factors that need to be valid in order to be considered a Wolfe wave. But as you can see here, this is a 15-minute time frame, and this is a bullish Wolfe wave. And so as you can see, we come down. Now I know here we have about 5 candlesticks hitting this point, and then we go away. It's okay. I do this also with triple drives. If I have a bunch of candlesticks, one after the other, respecting a point, I'll count those as just one. Okay. So what I do here is I mark just the lowest point right here. Then we go up to 2. We came down to 3. We go up to 4. Okay, and then from here, we made one last thrust, which you can see exceeded the trend line between 1 and 3. But then we went back in and started respecting it and started taking off from here. And so I just put a trend line connecting the lowest point of 1 with the highest point of 4. And then as you can see here, the market shoots up. And we hit that point, and this will be your take profit. Your stop loss will be right below the 0.5 here. Okay, so again, symmetry is very important. You know, this is borderline a bit messy, but you can see that it did work. And then I have here another very nice example in another Forex pair, which is the New Zealand US dollar. Let me see where I have this. Okay, it's here. Let me hide the moving averages. So right here, you can see this is a very, very nice, clear example in New Zealand dollar. You can see market is trending down. And so then we're basically flagging upward. So basically we're coming down, impulse move down. Then we start flagging or channeling upward like a bear flag, and then we have continuation. So then here, if we zoom in, we can see that we have our first point here, the first impulse, then second wave, third wave, fourth, fifth, and then you can see the fifth just exceeds the channel top here. So we have 1 and 3 and 3 and 4 are almost identical in length. Plus, there's good symmetry between the distance between 1 and 3, 3 and 5. Okay, so all the symmetry components of this are very well defined. And so you can see right here then, we make a trend line or a ray projection connecting points 1 and 4. Again, this will be a reversal pattern. So as soon as you see that we close back below the channel, and especially with this candle, which is a bearish pin bar here back inside the channel, then you would open short there, stop loss just beyond the high here on 0.5, and then your take profit would be here on the projection. And obviously, you know, context is everything. In this case, you can see we had an impulse move down. We're flagging upward, so we're expecting a breakdown and continuation of that move. And then we have here the triple impulse with the 5 waves, and this is a very, very nice example of how to use the Wolfe wave. Okay, so again, it's a very good pattern, and it's actually, I feel, one of the most efficient patterns. However, like I said, we need to make sure it hits all the specific points of symmetry and is not a pattern that you're going to see a lot because of all these factors. But when you do see it, I definitely recommend you practice on it and see if it would make a good addition into your trading strategies. Okay, that's pretty much it for the video. Hope you all enjoyed it. Remember to subscribe, hit thumbs up, leave any questions or comments, and check out as well my website, my channel playlists, tons of free content here, as well as my trading courses for more detailed information on all my strategies. Okay, take care, and I'll see you in the next video.